Doesn't it feel like the rich are constantly getting richer no matter what? How are they doing this exactly? Well, it appears the number one reason for the rich getting richer is a phenomenon known as the Cantillon Effect, which basically says money printing will benefit certain parts of the economy more than others. In fact, it will give some people more purchasing power at the expense of others in the economy. Hey folks, Liquid here. So in this video, I'll explain just what is the Cantillon effect, how exactly does it create wealth inequality, and most importantly, what you can do to protect yourself from this effect so that you can keep up with the wealthy and not get left behind. The French economist Richard Cantillon published an essay on economic theory in 1730. He described how there's an uneven expansion in the economy when new money is introduced into a system. The new money kind of goes through the economy in a tiered structure. So those who can get access to the money first will have an advantage over everyone else. So who's first in line? Well, when policymakers create new money, chartered banks, foreign institutions, government contractors, bureaucrats, and other members of the state will be able to use that money first. And a lot of times, what these large financial institutions and other corporations do is they buy things like financial assets, real estate, and commodities. And then the money moves into a secondary economy and it goes into factories, mines, other businesses, and other means of production. And every step of the way, they're creating more demand by putting more money into these different assets and therefore pushing up the prices of everything. So by the time any of the remaining money, if any at all, that gets into the hands of consumers, inflation has already happened. So the average person has benefited the least from the printed money. This is like taking turns to pick toys from a box, and you're last in line. So the first person has the biggest advantage because they can choose whatever they want. But by the time it's your turn, there's just not much to pick from. This, in essence, is the Cantillon effect, or you can say Cantillon effect if you want to impress someone. But it's not just average working class people getting proportionally less benefits. It's actually a financial setback because it's taking purchasing power away from them. The initial money that was already in the system before the money printing started actually becomes devalued because there's so much more money now. So it's like a double hammer. It's a transfer of wealth from the people with old money to people with new money. And those who are closest to the money printing source benefit from the excess liquidity at the expense of those who are furthest away from the money printing source. This is why the rich get richer after every economic recession. And those who are most responsible for exacerbating this wealth inequality around the world have been central banks, such as the Federal Reserve. And I'm not the only one who thinks this. A lot of experts, including investor and hedge fund manager Stanley Druckenmiller, thinks that printing money is one of the worst things you can do to financially vulnerable households. He warns that the current Fed policy of creating excess money is totally inappropriate. Here's a clip from a keynote speech he gave recently. Take a listen.
I don't think there has been any greater engine of inequality than the Federal Reserve Bank of the United States the last 11 years. So hearing the chairman talk about visiting homeless shelters is very, very rich indeed. I just had the best year I've had in 15 years last year. Everyone wealthy I know is making a fortune. And why are we making it? Because this guy is printing money like there's no tomorrow. And the kids in Harlem, in my opinion, are not benefiting from money printing, but Stan Druckenmiller and other wealthy people are. So for the life of me, I can't figure out why the left is so excited about money printing when all the data says the people that benefit from money printing are rich people that know how to navigate the markets. So that would be one answer to your question. I would also say that this thing, in my opinion, looking out 12 to 18 months, is going to take one of two paths. As you can tell by my portfolio, I'm betting on reflation. I'm hearing it from companies. When you grew the money supply at 25% for a year, it makes sense. It's historically correct. We have a whole generation who haven't seen it for 10 or 12 months, so they can't even deal with the concept. So I think the odds-on bet is we're going to have inflation, and inflation is going to hurt poor people, again, a lot more than rich people. Now, let's suppose I'm wrong. I mentioned earlier that anything I say on the markets is a word of caution because I changed my mind. But how does this thing end? To me, the asset bubble, which he's blowing up into unbelievable proportions, busts before the inflation ever really manifests itself. That's what happened with the housing thing in 08, 09. We never really got to the inflation because the asset bubble burst. Um, Not dissimilar to what happened in 29. That's not my central case, but let me just say we've never had a deflationary bust because inflation was too close to zero or 1.5 instead of 2. We've had them because we've had these tremendous asset bubbles. It happened here in 29, it happened to Japan in 90, and obviously it happened in the great financial crisis. And there is no one, no group that will get hurt more by a bust than the poor. They will be first in line to get screwed, trust me.
So, as you can see, the Cantillon effect works against people who don't have a lot of money. But what we're seeing today isn't new, and this theory has been around for almost 300 years. So, here's a few things you can do to protect yourself against the Cantillon effect. First, you can get your hands on some hard money. This could be precious metals such as gold, or it could be digital currency like Bitcoin. These types of assets cannot be devalued by printing more money because there's a maximum fixed amount. Now, you could actually go and mine these hard money assets, but most people lack the tools to do that, so it's often easier to just buy the ones that already exist in the world. The second way is to start a business. Be an adventurer who invests in the purchase of goods and materials with the incentive to sell these in the future. This is actually Richard Cantillon's definition of an entrepreneur. So find gaps in the economy where you can fill, find inefficiencies where you can make things better, find ways you can add value to others and monetize it. Because no matter how much money is printed, people will always pay for value. So you don't have to wait for the printed money to get to you eventually. You can consider your own situation, take a look at the possibilities and the vast opportunities you have today, and think of ways to create your own cash flow. The last one is a little bit controversial, but it's basically create your own money. As the saying goes, if you can't beat them, join them. So, what do I mean by this? Well, you can't literally print your own money because that would be illegal, but you can leverage financial institutions and take out loans to invest in assets. This evens out the playing field, and it means that you can invest alongside those financial institutions and large companies and governments that get the money first. In fact, if you're quick about it, you can even front run those people and get in on assets before they do. This way, you don't have to wait on the sidelines to receive your share of the printed money and miss out on all the gains in the meantime. For example, in March of 2020, I noticed that central banks were printing a lot of money, putting a lot of assets on their balance sheet. I figure the people who can get the new money first will spend it on financial assets, so we'll probably see asset price inflation just like in 2009. I looked at the insider trading for bank stocks. A lot of executives were loading up on company shares. So right away, I borrowed some money and I bought some shares of TD Bank. The stock recovered quite well over the next few months, even though the economy was still in shambles. The general economy didn't start to grow again until Q3 of 2020, but by then TD shares have already gone up 25%. That's the Cantillon effect. Another example is in the summer of 2020, the Bank of Canada started to buy provincial bonds and it increased its mortgage bonds from $500 million dollars to over $5 billion. Dollars. This injection of extra liquidity into the market is likely to keep interest rates low and increase asset prices, particularly real estate assets. So I borrowed money in the form of a mortgage and bought a house. And a year later, which is basically now, the house is worth more than what I paid. Now, had I waited until this year to make the purchase when the economy is better and unemployment is lower, then I would have missed out on the last year of real estate gains. Plus, my money is worth less now than last year because of inflation. The cost of living is higher, but my financial situation hasn't caught up. That's the Cantillon effect. The good thing is borrowing costs are still really low. I've been offered 1.99% on a line of credit. My margin account charges 1.6%, and mortgage rates are still near record lows. So, whenever a huge amount of new money is added into the economy, you can borrow money cheaply yourself to invest alongside the wealthy, the hedge funds, the bankers, and own assets before anyone else gets a chance to collect their money and buy those same assets, pushing up their prices. So, this strategy has worked pretty well throughout history. But you can probably see why I said it's controversial. You're basically using leverage or borrowed money to speculate in the markets, which does come with a lot of risk. So this one's hard to recommend for most people. But there you have it, 3 different ways to protect yourself against the Cantillon effect. If you like videos like this one, you can expect more in the future. I will be uploading every Sunday, and I will alternate between long form videos like this one and YouTube Shorts, which are less than a minute long. I can go deeper into topics with long form videos, while shorts are going to be focused on answering personal finance questions or introducing an interesting topic. I hope you'll enjoy both forms of content as they come out. That's it for now. Thanks for watching, and until next time.